Welcome back, everybody. We are looking at the dollar index, and this morning we will be looking at a trading review video. And I will look at a couple of silver bullet trading ideas and how I would have approached these silver bullet entry points. To start things off, dollar index has now traded the equal high, so that would be a target hit. Looking at euro dollar has also hit its target in the form of an equal low, which has been done so today. Quite coincidental how it just happened to form another equal low right there, and then price cleared it today after trading inside of the order block right there. All right, over to the ES, Dow, and NAS have been trading against the dollar, which is a low probability condition. If dollar index is trading higher, you want to see correlating pairs and future market trading consecutively lower. So let's take a dive into one of these markets and let's look at a couple of silver bullet ideas. I think the Dow will give a few fruitful ideas in this area. Let's look at Nasdaq. Nasdaq. We have an order block right over there, which has been traded. Let's take note of it. There we go. That's the order block. It's noted right there. Price traded into that and then consecutively moved lower, which could also be another interesting example to take a look at. And then we have E-mini S&P, which has traded into a fair value gap, which could also be another interesting point that we could take a look at. All right, let's start things off by looking at the S&P. Let's shift down to lower time frames. Let's see if we can find any trade ideas inside of these PD arrays, which would match our model ideas. All right. Looking at the lower time frames, working our way down. Ideally, I want to look at this piece of price action that we had on Tuesday. So taking a look at it over here, we came up, we traded into the higher time frame fair value gap. So looking at this example, we can see that we came up to this area around about 8 o'clock, 8:30, and then started trading down lower. So let's work down in our time frames. Let's go back to, there we go. So we're looking at 8:30. That would be early session. Market opens around 9:30. This is most definitely not the cleanest piece of price action. As we can see, we traded down very choppy and very much high resistance on this specific day. So if we look at this example and we want to take a look at a silver bullet, 10 to 11 in the morning. Let's see if we can frame something in this price action. Okay, 10 to 11, right around there. Okay, 10 to 11, price has came up, traded into this daily fair value gap. Price subsequently traded down lower, and it shifted its market structure in this area over here. We shifted down through these lows, all of these lows shifted down through and continuously traded down lower. If I was looking for a silver bullet setup, I would take note of these order blocks over here being respected. Again, them being respected over there, and price respecting it again over there. Actually, it respected the mean threshold in this area, probably. It kind of hung around inside of the relevant range, but it's in the range of this order block. I would be looking at this, price turned into that. It's not the best or cleanest piece of price action looking to the left. If I was looking for any gaps in this, then not much in this piece of price action stands out to me. The first gap that does, however, jump out at my face is this one over here. Extend this gap over here. That's the first gap that jumps out at my face. I don't like anything inside of this price particularly. This gap over here, I like this gap over here. And then we can target these lows. These are equal lows. You can target them, these ones. Those are equal lows, equal lows. They can be used as a target. We can just go up to a 5-minute or a 15-minute just to get a better view of what is really going on inside of price action. We have equal lows sitting down in there, which are obvious. And then we also have more equal lows sitting down right over here, in fact. So we can take note of these levels. You can also go up to a 15-minute and you can take a look at price action in this area. You can see again we have these equal lows in here. And we have these ones. So those would be my targets. If you look for a higher time frame PD array, you can go on to a 5 or 15. We have a order block over here, which in this case it's not going to be relevant because it is below my piece of price action, but I will note it and we can go look at where this order block sits, but that one will not be relevant for us. In this case, something that might be relevant might be this wick. It might be relevant. 15-minute wick, consequent encroachment. That would be a relevant level. You can also use the 15-minute time frame to find a higher level of, in this case, a supporting PD array, which would support price or act as a resistance for price to continue trading down lower. So here we have this wick, consequent encroachment. That would be my higher time. Let's get rid of these order blocks. Those are lower time frame confluences, just so I kind of get in line with the ebb and flow of price. But that 15-minute wick consequent encroachment, that would be my higher time frame PD array. And we also have this daily fair value gap, which price traded and price reacted trading down lower. Let's go back down to a 1 minute. And also looking at this piece of price, we have this beautiful fair value gap from the lower time frame, which is not seen here. But what I do see and what I like is this, again, this wick consequent encroachment, right, level right there of this order block. I like this one. I didn't trade this one. We could look at this wick. I really like this wick over there. I like that wick, which that did get traded. So I'm going to take that as a reference level down. It's not needed, but we're studying now, so we are taking note of this level. Let's go down to a 1 minute time frame and let's look at the trading idea. There we go. So looking at this 15-minute consequent encroachment wick, this would be the order block with a 5-minute order block level. Let's just take note of that so we do not get confused with these levels. All right. So 15-minute consequent encroachment wick level, we traded up into this level and we rallied down and we broke market structure right there. You can also use this point, but I like to go back to the parent swing, which formed this price rally up higher. Once that gets broken, we have a definite market structure shift. There's a couple of ways how to trade this price action. I just want to go up into this higher time frame and reference. I knew that was not a fair value gap. Sorry, that was a order block level. You just see 22nd of August, 10:15. Let's just make use of this. 22nd of August. Let's just jump right to it, shall we? Good. So that wick consequent encroachment level would be my higher time frame PD array that we traded into. Then we have this fair value gap sitting right here, this one. So looking at this, price took out these stops, resting above these equal highs over here. Price took those out, rallied down, gave a market structure shift, came back up into this fair value gap. That would be your entry point. So that right there, that rejection, that would be your entry. Your stop would have to be above the candle that created the fair value gap. As far as take profits, remember we were looking at these equal lows and ultimately these lows down there. Now this is 11 handles in, so this would be a viable, it would qualify as a trade. Looking at it right hard edge, seeing this candle right there, measuring down, it would be more than 5 pips, it would be 10 pips. So that would be a qualified trading idea. So there would be no reason not to take this idea if you did not see this specific idea. So that would be your entry point right there. Stop would be above the candle that created this fair value gap. and you would be targeting this equal low. You obviously should be taking a partial at 5 handles, which is right over there. That got hit, no problems. And then 10 handles, 11 handle and a half handles was there. That got traded. And then unfortunately the 15 handles, if you were holding on after taking a partial there, you were aiming at this. That did not get hit until only after the silver bullet session, which I am going to look at an entry, this one specifically. So let's say you took this position here, or let's say you did not take this position. I believe this one would have been the idea that I would have taken if I took this trade. All right, let's extend this fair value gap in time. It would still be valid over here. We still have this 15-minute order block, which we traded up into as well. And we still have the wick consequent encroachment level up there. Now we do have this order block over here as well, which would qualify as a order block level. Nonetheless, we traded above this high, taking out its stops. And this would still be viable as long as we don't go outside of the session. Rules are 10 to 11. That's your hunting grounds. Anything outside of that, that's a no-go. That's what the rules say. So we have an opportunity over here in this candle right there. We trade down lower. That gives you your confirmation, your rejection. If you were to take a short position, it would have to be in this one of these candlesticks over here would give confirmation. Again, the stop would have to be above this candle, which is almost 5 handles, which is not too bad, really. It's not too bad. You can now target this low or these equal lows down here. They all have liquidity. It would be advisable to take a partial or take something off at 5 handles, considering looking at this piece of price action to the left. You would want to pay yourself something. Targeting this low price did not quite hit that equal low price. Did, however, give you 8.25 handles over here, which would have been a very good partial point below these lows over there. So there would be no reason not to take something off. And then you would have to switch to managing your position. And then we have this order block level in there, which price trades the order block. Price then trades down lower, taking out this low, which again, if you didn't take anything off through this and you sat through this, you should have paid yourself something right there. Something should have came off right there to secure some profits. Then holding on to it, price came back to this same order block level. It just sat around this level, just hung around it. We also have a volume imbalance. We have a volume imbalance sitting around there. We have one right there. So that would be another level that you would look at. Remember, volume imbalances are one of the beauty arrays that are allowed to be traded around and through. So that PD array, that one was holding price over there. So that's good. You still have the order block right there. So you are all good. You would have been sitting through for quite some while. You would be sitting up to lunch. 11:50 to 12:10. That's your next macro. Let's just go ahead and grab this line over here. Let's grab this one. 11:50 to 12:10. 11:50, 12:10. Let's see. There we go. That's your macro. 11. Oh man, 11:50, 12:10. Come on. There we go. That would be a lunch macro. Not much happened. We just chopped around. Jeez, man. 11:50, 12:10. Nothing much happened. It just acted as a consolidation period, as a lunch period. So price did, however, rally down. And again, we have this low. Price came at back to this low. So that again, if you didn't take any partials or profits, then you probably should take something off there, because that it would just be painful sitting through all of this and you don't pay yourself something and get out of this. So you should have paid yourself something in there, and then you would be targeting this equal low, which it only got hit after the lunch. Only got hit after the lunch. It got hit right there. And then price rallied down, cleared all your levels. Simple as that. So that would be one example of how you could, that's two examples of how you could take a silver bullet position. The first one being over there, which would be a cleaner example in my opinion. Goes right to your target, no hassles. You can see the algo spooling over there. So that is good. Something algorithmic in price going on in between 10 and 11. And it's clear to see that something has gone on there. So that would be a silver bullet trading idea. I gave you two in here now. Let's get all this stuff off of here. No. Perfect. So now let's go back up to a daily time frame. There we are. Let's go over to Dow. If I'm looking at Dow and I'm looking at Monday's candle, I will be looking at the wick consequent encroachment level. That is going to be my premium array. That would be the level for me that I would watch. Then going down into lower time frames. Let's go up to a 4-hour first before going down as low as that. There's that. We can see price came up into the level, traded the level. Is that correct? Why does it put it so? It just looks kind of weird on a lower time frame, I guess. But it is nonetheless over there. We had this daily fair value gap, which was a premium array traded into. Price rejected that down to a 1-hour time frame. We would be looking at, I believe, Tuesday's price action right there. That's what we would want to be looking at. Just looking at this piece of price action, I see a fair value gap and a order block. There's your fair value gap. There's the order block right there as well. Not noting that one for this example. So 1-hour fair value gap. I'm only referencing the fair value gap. Honestly, that's all that I need. Let's go ahead and note this order block anyways. Let's take note of it. 1-hour order block. There we go. Let's work down into a 15. Perfect. 22 August. And again, we can see that same order block, fair value gap level. We have a nested inside of fair value gap over here. We took out this high. That's my higher time frame PD array. That's what I would be looking off to key off of. For targets, looking at this piece of price action, we would be expecting bearish prices as we have been all along. In this example, yes, we do get down to these. I like these lows over there, those ones. all of those. But take a look at these ones too. Don't forget about those little small, tiny ones. These ones are equal lows as well, so they are valid as well. Equal lows, equal lows. There we go. More equal lows. Just put them at the bottom. There we go. Put them at the bottom. And if I'm looking at this piece of price action over there, or even this price swing over here, I would be looking at just grading it, just taking a fib and just writing a candle high, highest candle, lowest candle in a range. And then find your 50%. 50% is over there. So these equal lows are pretty adequate. I would not be looking for anything lower than this fair value gap as a means of a target, because I don't, unless it wants to clear this low, which it probably could, but that's just my approach, or how I would look at it. That would be a 15-minute. Let's just note that, because I will forget about that. Fair value gap. You can get rid of this fib. So let's then work it down into a 5-minute. Let's look down what's going on over there. Again, we shall look at the 10 to 11 time frame, and we can see what price will offer us on this specific day. Yeah. Come on, 10 to 11. Let's see. Is this one correct? 10 o'clock. Good. All right. So you can see price really rallied quite a lot already before pre 10:11 a.m. Let's go down into a 1 minute and look at price action. All right. This looks a lot better than what we saw on ES&P. 10 to 11 o'clock. The first thing that stands out to me is this balanced price range. We got these little candles, this one over there. We got this gap. You take the smallest one. That would be one gap over there. Which, okay, well, it does not meet my criteria. But I also have this one over here as well, which I like as well. I like this one, so that will be the one. I believe if I took this one, then that was the one that I was originally looking at the first time. It kind of spiked into it, but I would be looking at both of these, I guess. I'd be looking at both of these ones at the time of this trade idea, and just to find something down here that could give some sort of a support to price. Quite a tricky one, but I will look at a reclaimed block. Oh, yeah, right there. See that right there? That would be a reclaimed order block. I believe, let me just gather my bearings for 1 second. That's where they, hold on, give me 1 second over here. Order block. Yeah, that should be a reclaimed order block, because that's where they bought more of it and then it rallied higher. So they would be looking to negate those positions on the opposite side of the opposite side of price. So that would be a reclaimed block. I hardly ever use them, That's why I had to think about that one for a second to be sure that I'm not giving you the wrong thing. But that would be a reclaimed block. You can feel free to go find more on reclaimed blocks in ICT's core content in the 2017 and 2016 mentorship videos. I believe they are on month, I believe it is month 5. You shall find them there. Let me make 100% sure for those who do want to go and watch that video. Give me 1 second. Let me see. Month 5. No, it's not month 5. You're going to be looking at month 4. To be exact, you are going to look at, where is it now? Reclaim blocks. It's gonna be video number 3. Video number 3. 3 point something. Reclaim blocks. So it's gonna be month 4, video number 3. That's your reclaim blocks. You're gonna be looking at that, and that will show you how reclaim blocks work. How on the buy side of the curve, they would use that order block. Let's go back up to the 15. Let's go back up. You're gonna get confused. Let's go back up. Let's go find it. Okay, was it on a 15-minute time frame? Yes, it was. 15-minute. There's an order block. All right, order block that would be used to reaccumulate new buying positions on this side of the curve. Okay, so they come back to it. They buy it right there. It rallies up, takes out the highs, these highs. On the sell side of the curve, they're going to go back up there to mitigate those positions. So that's how you use them. Okay, so back to the example at hand. If you want to go study reclaim blocks, you can go find them on ICT's channel. You can go study them there. I am not teaching them to you today. So looking at that idea, that would be my anchor. That would be my higher time frame PD array, essentially, which it did get hit over there. It just, with the spread in the broker variance, but it did get hit. So that would be my PD array. It took out the stops. It just dropped, moved down lower, and then I would be looking at these fair value gaps over here. These ones, they would have been ideal for me to take a short position to target these lows down here and ultimately take a target down into that 15-minute fair value gap I showed you. It just depends on which fair value gap you are going to be looking at. By the way, these ones are inversion levels. They're inversion fair value gaps because they have been traded up into and traded through. So let's just label them as inversion fair value gaps. So that would be a first point of entry, which you get multiple. I wouldn't look at these two candles. I would be looking at this one right there. When it trades right up into it like that and it hits this top one, that has me interested. I would be taking a short in this next candle over here. That's one way how you could approach this one. That's your first approach. Okay, right, like that. And in this particular example, I would look at placing a stop right above this candle, or above this order block. This would be an order block over there. You can place a stop above that, or you could place a stop above this order block over there as well. Depends what you want to do. That's up to you. Anyhow, your first target would be this equal low. That is 0.12%. That would be about 0.12 would be about 500 five handles, not 500. Five handles. I'm sorry, five handles. That's why I usually, you would, if you go look at some of the examples that I posted on the Twitter, which were trades that I took on paper on the TradingView platform. I took those on paper, and I posted them on the Twitter account. So there's those. For those of you who do follow along, you can go find them on Twitter. I left them on there. I also posted them on the Telegram. Usually I post on the Twitter first while the execution is going on, while the trade is happening. And after the fact, I would just update the Telegram and just repost that to Telegram as well. If you want to follow along live, it's best that you probably follow along on the Twitter idea though. That's where I usually just drop a example. All right, so that would be a first idea of how you would be looking at that. So that would be your first target. Then you would go over to managing the position, which then you would be trading up into. There's like a tiny fair value gap right there. Okay, didn't trade that. Didn't trade this one. So then traded into that one, and we also have one over here. Let's go with that one right there. That one looks to be the best. So we traded back up into this gap, and then price rallied down lower, clearing this low. That would be 0.19%. You're looking at 0.12 for about 5 handles. 12, yeah. You're looking at a couple more. You're looking at about, yeah, sheesh, man, 12. About 7-ish handles over there. You're looking at roughly about 24% to get your 10 handle mark. That would be your 10 handles. You would be managing your position, looking at PD arrays, order block, boom, traded order block, trade it down lower off of that. See that order block, trade it back into that, trade it down, roughly clearing these lows. Your target would be this down here. So this trade would automatically qualify because it had this equal low down there, and because you were ultimately reaching this fair value gap down here as a discount array. So that would qualify, giving you more than 10 handles on this position. Now that's one idea how to get in this position. Now the second idea would be, let's forget about that. Second idea would be this gap, would be this inversion. Okay, this inversion fair value gap, price would come up into that, trade, tap the order block, stops like a brick wall, entries right there. Stop loss. My stop would be above the order block. You get several order blocks in here. You can decide where you want to put the stop, above which one. That's up to you. And then ultimately you would be targeting this as a low, which you can see that gave you more than 10 pips. About 10, 11, 12, about 13. For I keep talking about pips. It's handles. 13 handles. So that will be how you would handle this situation. That would be that specific idea. That would be how you would approach that one. Let's get rid of this stuff. Okay. For the last one, I'm looking at NASDAQ, which I'm not sure if I'm going to. Well, let's go see. Let's see if we find something. Yesterday, okay, we traded up into a daily order block level. Let's hit straight down. It's a lower time frames. Let's just extend these levels. For some reason it just does not extend it to the all the way to the levels all the time, which that's kind of annoying. So anyway, it goes right back to the level. You gotta go again. 8 o'clock. 8 o'clock, baby, 8 o'clock. Okay, we're looking at anchor points. Let's get to 10, 11 o'clock first. Let's find horizontal line, vertical line, vertical line. I'm looking at vertical line. 10, 11 o'clock. All right. Okay, if I'm looking at this, my anchor point is going to be this breaker block right there. That's the first one that stands out to me. So I'm not going to argue with it. That's the anchor point. 15-minute breaker block. There you go. That's the anchor point. Let's drop down into a 5-minute. Gnarly. Look at this price action. Yeah, I don't think I didn't trade this. I traded last week. I traded on Monday, I believe. When did I take a position? I think it was Monday or something. I don't know. I'm not sure. I'll check before the end of the video just to be in correction. Anyway, we traded that daily order block right there. Bam. That's a hard time from PDRA. We took out these stops. We took out those stops. This breaker block right there is a prime and sweetie. You know what? That right there just kind of it almost frames the whole silver bullet. Then we also have this gap in here too. This gap, which could be used as another example. But I kind of like this right here as it said. So for those higher time frame people, if you want to look at a higher time frame trade, this is it. Higher time frame trade, you have a breaker block right there. You have the daily order block that it traded up into that. You can see it kind of did the stacking like bam, bam, bam. Stack triple highs. Okay, it stacked the highs. Took out the liquidity resting there. Market structure shift aggressively. Yes. We had a breaker block right there on the 15-minute. Comes right back into it. Comes into this gap. Trades it right there in this candle. Rejects it off. There's your entry. Stop above the breaker block. Targets. We did not look at targets. Ladies and gentlemen, we did not look at targeting. As for targeting, I would look at, let's see, what would be reasonable here. No, I don't want that. Don't give me a rate line. I'm looking at trend line. This one kind of stands out to me, so I would use this one. It would be like all low. That would be one. This is kind of like an equal low right there. So that would be a target point for me as well. So I would be looking at that. Equal lows. So that would be target points. And then you got this gap in here again. Again with a gap. Fair value gap. That would be my last target. I would not look for anything lower than that. That would be a 5-minute fair value gap. So that would be it. Hold on. Let me just put this at the bottom for the sake of clarity. So that would be your position. And now looking at this, this would be a viable position. You see that? 0.31%. So that would be more than 10 handles. So that's a viable position right there. It's inside of the silver bullet time window. That would be how you would approach a higher time frame if you were looking to trade the silver bullet, perhaps on a not a 1 minute, 2 minute, 3 minute, on something a bit higher. Let's go down to the 1 minute time frame anyway, because I know a lot of you are going to request the, the lower time frame. This just looks like a mess. That right there is just like, wow, that's a mess. That is a mess. Anyway, looking at this lower time frame, let's just get rid of this over there because we will look at it from a different view. So looking at this one, we can see that price came up, it cleared this high. And it so just happens that this would be a breaker block. Okay, last high, higher high. That's a breaker block. Price comes right back up into the breaker block, subsequently trading also into the 15-minute time frame breaker block right there. Let's bring that closer. Trades into that, immediately rejects. Knowing me, I'll be short right there all day long. I'll be a short seller all day long. As far as a stop goes, this one is a bit tricky though, since we have this really sloppy price action to the left. Kind of makes it a bit more challenging to find a proper stop. Honestly, let me see how I would approach this. You know what? I would put a stop inside of this breaker block. I would pull a fib, pull it on the 50%. See that? Smack bang, 50%. Boom. Stop goes right there. It's a 15-minute breaker block right there. So that's your stop. Your stop's going to go right there. It's going to be a 0.11. So that's going to be a 5 handle stop roughly about. And we are targeting these old lows, which would be, 0.30%. That would be more than 10 pips. 10 pips being 0.24%. So that gives you some headroom to play with over here. Okay, so that's your first example. And you could be trading that one. You could be holding it down to this, down to target down there. That's one way of getting in. That's how I would have gotten into this position if I was trading this specific time window. If not that, then I would still anchor this breaker block being a PD array that was respected. So I would not expect price to go above that again. I would be looking smack bang at this gap. This one right there. Yes. Short position would be somewhere in there, and your stop loss is going to be right above this gap. Target is going to be this equal low. 0.24, that's your 10 handles right there. 5-minute fair value gap. There is your more than 10 handles trade right there. So there you go. That's how I would have approached that one as well. So that just gives you a rundown how I would be looking at these things, or this is just how I would have traded. If I was trading on these specific days, that's how I would have looked at the silver bullets they had. What they offered me, that's what I would have looked at. Of course, you might be trading it differently. So it just depends how you approach the situation, honestly. Again, looking at dollar, we cleared the highs. At this point in time, to me, this is not really a market that I would really want to be trading inside of. We traded this weekly order block right there. You can see we're just about tapping into that now. Once we tap into the low, we have the mean threshold as a next target. And we shall see what it does from there. But at this point in time, I do not like the fact that indices, futures, not indices, futures are just trading right with the dollar. I just don't like that. To me, that is more of a low probability condition, meaning preserve your capital, sit on the sidelines, be patient until we get a clear draw on liquidity. Like I have presented you the past 2 weeks. We knew we were going to go up. We were trading for higher prices. We were looking for lower prices on the futures markets, which gave us a whole bunch of trades. So you should be able to comfortably be sitting on your hands when there is no clear trade presented to you. As far as markets, I believe most of our trades were on the NASDAQ. I just pulled it up to the side over here, just looking at our trades. At least the ones that I took with you guys. We had one on the 15th of August, which was on NASDAQ. The 8th of August, we had one on NASDAQ. 15th of August, we had one. And the 21st of August, which was Monday. We had one Monday, or I had one on Monday. I remember trading. Let me hold on. I had to quickly pull up the Twitter over here so I can just reference back to that. Let's reference. So I was going to reference. I remember I tweeted. No, yeah, it's running. I believe I tweeted. Let me see. Hold on. Let me see. Okay. Where is it? Let me see. August the 17th. No. 21st. Oh yeah, here we go. This morning it's running without me. That would have been the cleanest one to me. Let me go ahead and bring this up so you can see it over here. There we go. Oh, yes, I'm still expecting lower prices. We turned it into that fair value gap. NASDAQ and Dow gave me the obvious draw, which, what were these equal lows over here? And we had this gap and that fair value gap right there. And then we had Dow, which again, Dow was pretty obvious too with its old lows down here and stuff like that. So we had that resting over there. And let's just go over that over here. Okay, there we go. Then boom, this morning it's running without me. Dow would have been the cleanest to me. I just saw that. I saw that breaker block. I saw a 15-minute order block. Breaker block. It never came back to it, just sort of running off to the target equal lows down there. Then I was looking at my averages and I saw NAS 100, NASDAQ. That was our trade. I had a breaker block, kind of messy in this area over here. And then it did follow through and then came back to it. Traded through it. But you can see how the candle just, it just holds. It just holds the level. And it hangs around. Kind of hung around again. So I took it. Stop was above the breaker block over there. That's this whole array of candles would be a breaker block. That would be it. Targets along the way. I took a partial, I believe, somewhere in one of these areas. I think it was this lower down there. That was a partial. This was 5-ish handles, I believe. This partial, and then I had an equal low right there as well, which was the target. You can see we had 0.18%. So that was it. And that was, it for me. So then I posted this one when I took a some partials off right there. There we go. There's a low. I took something off. Paid myself partials. After taking partials, I believe I brought the stop to even, I think. And as I closing it, content with enough. And you're asking why, let me explain. And that's how I just explained to you that we, on the averages, let's look at the averages. They just rallied like hell. They just went down. Boom, tank. Tank right down. Equal lows right there. They just rallied down beautifully. And US 500, yeah, US 500, it was not as clean as well. So yeah, there's that too. It just ran down as well, cleared these equal lows. So that's why I was content with enough, and I ended up closing the position right there. I closed it off. You can see I closed it off. Partials, that was, I believe, 5 handles. I took it off. And I took it off because the Dow and US 500 rallied down a lot. So Dow would have, the sixth sister would have been the Nasdaq. It would have been the sixth sister to follow behind. And there we go. Posted it. It kind of hung around that partial level a bit. Put it back into that level. There's a gap right over there. There was a tiny gap. There's a gap right there. Extend it through. You will see that price trades through, comes back to it, and then trades down, clearing the target. That would have been it. If I was in the position, then I would have gotten out of the position at that specific point in time. All right. So that will conclude today's little review on price, as well as a little bit of a explanation to what is currently going on in the market, just giving you a bit of a review. As far as trades, I honestly would not be looking at taking any trade ideas right now. Price is clearly still bullish on dollar. As you can see, it's big up candles. It's just no slowing down quickly. Look at how quickly it just ran for this liquidity. Look at that. Bam. It just ran for that equal highs. It just ran for it like there was no tomorrow. Look at that. I mean, we have honestly been going, just hung around the level, and this has just been high resistance liquidity run. So I wouldn't honestly be looking, being teased and taking anything in that market, honestly, because not really something that I would be looking at. That concludes the video anyway, so hopefully you found this one helpful and insightful, and until I see you in the next one, good luck and good speed forward.